Welcome to the daily stock review. Today we're going to go over Nvidia. Goal of this channel is to uncover the world's best stocks that have 100x potential. I'm an individual investor, about 2,500 hours in on the journey over the last 7 years. I'm just sharing the lessons along the way. We're going to go over the stock analysis straight up. In future videos, we'll go through YouTube comment questions and answers, and then we'll also be reviewing goals. Here's my investing process. We're going to go and straight up look for how I came across this company, and then I'll be separating from the herd, so doing a 5-minute check to see if it's worth looking at further, which saves a lot of time for a lot of the other businesses. I learnt from these guys and they did pretty well for themselves, and I want to try and emulate that success and follow in their footsteps. So let's crack in. First thing we're going to be doing is pretty much Nvidia annual report. And what I want to do is just find that. It's coming up to their annual report and proxies. And yeah, reject optional. All right, so I can see that. Oh, look at this. What a great transparent company. It's got all its previous annual reports, proxy statements as well, which is a great sign. So it's got 2026 annual review. Let's crack that open and have a sticky beat. So it's in the 10K. This is a publicly traded company on a US stock exchange. What I don't want to do is get bogged down in all of this, especially for a 5-minute check. Trying to spend only that much time on an annual report is quite difficult unless you're quite disciplined in terms of where you spend that time. So that's the, Jensen's little promo, the CEO and discussion. It's good to go and check that out and have a read of it when we're doing a bit more of a deeper dive. But for today's check, we want to make sure, first of all, is this business worth looking at? What I'm looking at, first of all, is financial statements, and I will find that. Direct compensation, That's the proxy. Where is... And if you guys can see it, you're doing better than me. Direct compensation, ownership, executive comp. Alright, well, I'm just going to speed run through it and look for some things that look like tables. Right. Included. Yeah, cool. Show them. Yeah, boy. All right. Enhance. All right, so what I usually look at first is the income statement, which is what we're looking at now. You can see that, I guess, their reporting period is January of each year, so 24, 25, and 26. So this is January 2026 that we're looking at. And, it's middle of the year pretty much for them, so they should have some half-yearly results out either soon and be able to report on. But first of all, let's go and have a look at the revenue. So this is in millions. So we've got, geez, that's ridiculous. So 2024, they made 60 billion. In 2020 or end start of 2025, they recorded 130 billion. And then in 2026, they reported 215 billion. So that is an astronomical growth rate. That's just insane in terms of revenue. Gross profit, is pretty much the same as doubled. So like each year almost. So 44 to 97 and then 153. So cost of revenue is also increasing, which is okay. You'd expect that for unit sales. Research and development. So it looks like the company's deciding to invest some of this extra money and increase its research and development. A company like Nvidia, which, let's just say, I know that they create and manufacture GPUs and other, chips and things like that various industries need. And when you're creating hardware and different software that integrates with some of that as well, to get the best result, it's always the intellectual property or IP. And that usually comes from the business investing in that research and development and having that new intellectual property in advance. So how they're going to manufacture these things more powerful, faster, better, stronger, pretty much at the end of the day. So speed's an important thing. Sales, general, and admin has also gone up, but it's not a big number attacking that. Total operating expenses, it's gone up, but compared not to the same amount as the gross profit. So that's good. We've got some interest expenses and net income at the end of the day. 30, 72, and 120. So this is a pretty good company. At this stage, it's got a lot of right place at the right time. So let's scroll. What I do want to have a look at now is the balance sheet, just to check, is this company leveraged to the tits, or is the balance sheet actually healthy and support a healthy company? So assets, we've got total assets has grown a lot as well over this time. So what have they been doing? So, yep, all the current assets and things like that. So cash on hand and stuff like that, working capital that you need to maintain for the business has grown. So the majority of it's down here. So non-marketable securities. We've got goodwill, which usually comes about from purchasing different either subsidiary or different businesses and things like that at a premium to the valuation of the business in terms of whether that be when it was initially purchased. And so they'll carry that. That's a non-cash charge. So that doesn't mean anything at the end of the day, because you can't, unless the business that they got sells for that in the future, it doesn't actually mean anything. So liabilities and shareholders' equity and total liabilities. So total liabilities is a lot less than total assets, and it's even a lot less than the current assets. So could this business pay off its debts if any of these things came due? Yep, easily. So very strong balance sheet. Now we want to have a look at the cash flows. So this is where it's easy to tell, there's three things that I'm usually looking for. Has this, in a quick review like this, has a business mastered its customer and, it's making a lot of money? I want to see that the cash flows are actually coming out. But looking quickly at that net income, it's increasing and it's huge as well. Next thing that I want to have a look for is the moat around the business, and looking at things like how strong those profit margins are compared to competitors. If the business isn't seeing a lot of growth, it would usually mean that it's in a very competitive market. And next is I want to have a look at management. So how's management actually spending the money? Is it investing in things that are wise, or is it blowing cash here, there, and everywhere on things that aren't going to help long-term shareholders? So It's easiest to see that through the cash flow statement. Net income comes in and then it gets adjusted. So some of these are like non-cash charges, things that are required for GAAP accounting, but it doesn't actually affect the cash flow of the business. So stock-based compensation, depreciation, amortization comes out or goes back in, gains on marketable equity securities and publicly held securities. So they've got to report on those. But at the end of the day, that's just like you and me. If we own stocks and the price of them goes up over a year or a couple of years, decade, whatever it is, they have to report on it. It affects their net income, but they didn't actually get any money out of it. They didn't sell them and they effectively didn't have to buy them. This is just the gains on them. So that effectively goes back or comes out of that net income figure because it's not cash. They didn't get any money from them. They haven't sold them. They're just sitting there. And then other adjustments through here as well. So we get this net cash provided by operating activities. And this is an interesting number because this will help us get the free cash flow of the business. So when we pair this with property, plant, and equipment, and they've lumped it with intangible assets. So that could be things like intangibles are usually like things like brands and other intellectual property and things like that. Things that physical assets that like non-physical assets that you can't touch. It was what they mean by intangible assets, pretty much. So we get this figure and we take it away from there. And we can see because this property, plant, and equipment is so small that it's almost insignificant. At this point, Nvidia is literally just a cash machine for the time being. And looking at this, like that's an insane amount of growth, near double digits, like 100% growth or doubling year on year over the last 3 years. Now, what'll be interesting is doing a valuation of this business, because coming up with what are the realistic long-term growth prospects for the company. It's definitely not going to be doubling every year for the next 20 years. There's probably a small percentage that would be possible, but what's the realistic range that the business will go on? Is AI going to crumble? Are we going to have a meltdown just like in the .com bubble when it burst, and Amazon and a lot of other companies like that went back or dropped 95%? Is that then going to have an effect on Nvidia? How their operations working at the moment is a lot of their money is being through investments. People are building out data centers to support AI. So this is all the infrastructure that's going in place. And then Nvidia supplies the chips, gets the money from it. But if that industry, what we need to do on a breakdown is look at what are the implications of each one of these industries. If 90% of this growth is occurring solely to do with this AI build out, then ultimately Nvidia is linked straight to what AI is going to do and how those data centers need to be built in the future. Will they come up with a new technology that's requires half the amount of compute? Yeah, probably. But we need to go through that process. And coming up with that figure without knowing that information is incredibly stupid. So let's not do that. So, is Nvidia worth more of a look? I'd say yes. It has extremely strong growth. which makes it difficult for other investors to be able to look accurately at the future. There'll be a lot of talk about, the short-term price movements of Nvidia itself. So literally type into Google Nvidia stock price. If we go to Max and we have a look at it, we can see that, it's come from, a few cents up to 10 cents at the turn of the old century. And then it's grown kind of steadily up until 2015. And from 2015 to 2019, it was a fair bit of growth. And then it's really exploded pretty much since 2023. So in this period here, back in 2021, it would have been a great thing to have a look at. And what's an interesting snippet is, even with this value of the business, or sorry, not value, but the actual price people are willing to pay for it at the moment, which is up around $200, that PE is still only 31, or a ratio of that. So for something of this insane amount of growth, that's just showing me that a fair bit of the market either hasn't priced it to that growth, and they're probably still a little bit fearful about if this is going to continue. But it also means that people haven't thought long term about where this might actually go. So that's a great thing to look at. Have we missed the boat on it? Well, we probably missed a large climb, definitely. But we can only look at now, like where we're looking at the stock. So if we looked back here and we had a look at the previous annual reports, it'd be interesting to see if they had if their growth had been priced. But we're not there, so we're not going to worry about that. If you guys enjoyed this, feel free to check out the other reviews that I've done. And I will be doing a deep dive on Nvidia, whether that be on this or my other channel, and doing a valuation of it as well to see where that's at. If you have any questions, comments, put them down in the area to put comments at the YouTube video. And yeah, if there's anything that I haven't explained, if you've got a different take on it, anything like that, let me know. Otherwise, check out this next video because YouTube reckons you'll like it. Cheers.